Like to explain that cost sheet, whatever I tried to explain yesterday. First, you write the heading cost sheet. Then in the second line, you write the period connected regarding that costing period. It may be related to 1 year, half year, quarter, fortnight, or week, or a day, not day. Okay, cost sheet for the year, or for the half year, for the quarter, for the month, for the fortnight. Like this, you write. Then dollar sheet. Particular inner column for calculation, total cost for the writing the total cost per unit for recording the cost per unit. Okay. Then first you take raw material consumed. This raw material consumed is to be taken on the basis of detailed information regarding materials. So whatever material received, whatever material used, here you have to take the value of material used. Okay, the value of material consumed is to be taken. How to take it? It is based on opening stock of material, purchase of material, material received from store, material received from other departments. Okay, first you take the opening stock of material, then you take the raw material purchased directly, third raw material received from the store, then you take the raw material received from other departments, then you take the purchase expenses related to that material. 5 items you have to take first. Okay, first is opening stock, second is purchase of raw material, third is purchase expense. Okay, along with these three you have to take another two, that are material received from store, then material received from other departments, direct material. You take these 5 items, then total, take the total. Out of this total, you deduct the material not used. That is closing stock of raw material, material returned to store, material destroyed, material transferred. You consider 4 aspects. These 4 items you have to deduct. One is closing stock of material. Second is material destroyed. Third is material returned to store. Fourth is material transferred to or given to other departments. Okay. You deduct these 4 items, then whatever answer comes, that is called as material consumed. And divide this amount by the unit produced. You will get the cost per unit of material. Then second item is direct labor. You take this direct labor in the inner column and add outstanding wages. It is called by different names: direct wages, direct labor, productive wages, only wages. Like that they gives in the problem. On the basis of that, you see the nature of that wages. Suppose that is direct, you take under the head prime direct cost. You take in the inner column, add direct wage, outstanding, and divide by number of units produced. You will get the labor cost per unit. Then third is chargeable expense or direct expense. You take the total in the total column, divide by number of units. You will get cost per unit of direct expense. Then take the total. This total is called as prime cost. This is called as prime cost. And these 3 items are always variable. These 3 items are always variable. These 3 items changes according to change in the production. Okay. The next is factory overhead. Factory overhead means these are all indirect material, indirect labor, and indirect expenses. You consider that you are in the production department, you are in the production plant, whatever expense coming under that department or under that building are considered as factory overhead. So whatever I explained or shown yesterday, you take those items one by one in the inner column and take the total. That total is called factory overhead. Factory overhead. Factory overhead. Okay. To this factory overhead, you add opening work in progress. Opening work in progress. Add opening work in progress. Then deduct the closing work in progress. Deduct the closing work in progress. Work in progress means it is the work not yet completed at the end of the accounting period. It is the work not yet completed, finished. It is in the progress. It is in the conversion level, but not fully converted, but not fully raw material. Purely raw material, purely finished. In between these two, whatever comes, that is called as work in progress. Okay. Add opening work in progress and less closing work in progress. Then take the total, whatever total comes, this is called as factory overhead. This is called by 6 name. What are those 6 name? Factory overhead, works overhead, production overhead, or factory on cost, work on cost, production on cost. Okay. And divide by number of unit produced, you will get the cost per unit. Then take the total. The total is called as factory cost. This is called as factory cost, or it is called as work cost, or it is called as production cost. 3 names we use to represent. This factory cost is the aggregate of prime cost and factory overhead. Aggregate of factory overhead and prime cost. Okay. The next is office and administration overhead. Then next head is administrative overhead. What is administrative overhead? Whatever indirect material, whatever indirect labor, and whatever indirect expense we incur in the office and administrative department of the business concern is called as administrative overhead or office administration overhead. Okay. While recording the items coming under this head, you have to consider you are in the administration department. And what are the expenses coming under the administration department or in the general office? In the general office, there may be accountants, general accountants, clerks is there, pews are there, then furnitures are there, then printing and stationery is there, then the postage is there. Like that, whatever expenses you incur in the administrative department or in the office department, you have to collect and record under this head. Okay, this head items I also shown in the yesterday class. Okay, so you note down the items coming under this head one by one and take the total. Take the total in the inner column or directly take to the total cost column. You write all the items coming under the administrative overhead in the inner column, then take the total to the total cost, divide by the number of units produced. Divide by the number of units produced. Okay. This will give you the cost of production. This is called as cost of production. Okay. This is cost of production. What is the cost of production? Total, what is the cost of production per unit? Per unit. And this, in this stage, you have to make one adjustment that is called as finished stock adjustment. Finished stock adjustment means how many goods you produced, how many products you produced in the current year. To that production, you have to adjust the finished stock. Finished stock means opening finished stock and closing finished stock. Okay. While adjusting the closing stock of finished goods and opening stock of finished goods, first of all, you take the unit produced in the inner column. You see here, in the whatever units produced during the period, units produced during the period, you take in the inner column. I signed this as a U. XXX is the unit produced. Okay, you take the unit produced. Once again, I will show this. This is the total cost of production. This is the cost per unit. After completing this, in this stage, you write the unit produced in the inner column. In the unit column, inner column, you write the unit produced. Okay. Then you take the next step. Next step is add opening finished stock. You add the opening finished stock. Opening finished stock unit in the unit column. Under the unit, you write the unit of opening finished stock. And you write the value of that opening finished stock in the total column. If the value is not given in the problem, if the value is not given in the problem, you multiply the number of units by the cost of production per unit under the current rate. Under the current rate. Remember this. Let us consider you opening stock units are 100. Okay. 100 units are there. For that 100 units, so sometime they will give you the value. That value is 10,000. Okay. You write 100 in the inner column. In the total column, you write 10,000. If the value is not given, then you calculate the value by multiplying the number of units and cost of production per unit. Okay. This is the point. And you write the opening stock unit in the inner column and total amount in the inner column. Don't write the per unit in the per unit column. Remember this. It is very confusing. You confuse this or you make mistake here only. Don't write the per unit amount in the per unit column. Okay. Then take the total. Take the total. The total, this is the total. Then you deduct the closing finished stock less closing finished stock. Okay, you deduct the closing finished stock. Unit in the unit column, then value in the total column. If the value is not given, then what you have to do? If the value is not given in the problem, what you have to do? You multiply the number of units by the cost of production per unit. Then you ascertain the value of closing stock. Okay. Then you take the value or remaining value. You deduct the quantity in the inner column and amount in the amount column. You see here. Whatever the value comes, this value is called as cost of goods sold. This value is called as cost of goods sold. This means the unit sold, number of units sold, whatever balance is here, this balance represent unit sold in the given period. This is the unit sold in the given period. And this is the cost of goods sold, value of cost, the goods sold. Then you divide the total amount by the number of units sold. You will get cost per unit of goods sold. In this stage, there is a little bit confusion. You remember this. I'll send this video. I'll send this video to my Google Drive. You can see once again, if possible. Okay, you see this. I'll give one example. Let us consider you produced 12,000 units. How many units? 12,000 units. You produced 12,000 units in the current year. For example, in the month of September. In the month of September, you produced how many units? 12,000 units. Okay, 12,000 units produced. And the opening stock for the September is 1,000 units. How many units? 1,000 is the opening stock for this September. So you write 12,000 in the cost of production. Then you write the opening stock 1,000. Total is 13,000. Total is 13,000. Out of that, you less closing stock. Let us consider 2,000. 2,000 units. 2,000 units. If you deduct 2,000 units, the remaining indicates how many units you sold in the market in this current year. How many units you sold in the current year, you will get. Therefore, out of 12,000 units produced, opening stock 1,000 units, totally 13,000. Out of 13,000, the remaining stock is only 2,000. That indicates that you sold 11,000 units in the September. Am I right? You sold 11,000 units in the September. So you take the units sold and you take the total value and divide the total value by the units sold, not by the units produced. Remember this point. What to do? You have to divide the total cost of goods sold by the number of units sold to get the cost per unit of product sold. Okay. From the point of first, from the starting stage to cost of production stage, you have to divide the total cost by the unit produced. Remember, my dear friends. Okay. Then from the cost of goods sold to subsequent stages, you divide the total cost by the number of units sold to ascertain the cost per unit. If you want to calculate the total, you multiply by the number of units sold. Okay, I will explain these points while solving the problem also. Cost of goods sold. The next stage is selling and distribution expense. Whatever selling and distribution expense I explained yesterday, you take one by one under this head. Under this head, you take one by one and take the total. This is the total amount of selling and distribution in the inner column. The same amount take to the total cost column and divide by the number of units sold. And divide by the number of units sold, you will get the cost per unit. Okay. Then you take the total. This total is called cost of sale. This total is called cost of sale. Okay. Cost of sale. It is wrongly taken as sold. You take it as cost of sale. Cost of sale. Okay. Am I right? Then to this cost of sale, if you want to earn profit, if you want profit, you add required amount of profit. If you want to earn profit in your business, whatever profit you want to earn, you add that profit to this amount to ascertain the sale. Suppose you want to incur loss. Suppose you want to incur loss in your business concern, what do? You deduct that loss from, you deduct the loss from this cost and ascertain the profit. How to ascertain the sale? The sale is ascertained on the basis of cost of sale plus profit. Cost of sale plus profit or loss is equal to, sale is equal to cost of sale minus loss. Which you want, you can adjust. Okay. So next stage is profit or loss. If you want to profit, you add the required profit. If you want to loss, you deduct the loss, divide by the number of units sold, then whatever comes, that is the sale, total sale, cost, sale per unit. Okay, sale per unit. Clear? Any doubt about this chart? This is the chart cost sheet. You remember this sheet. This cost sheet comes for whole year. If you fails to understand the technical words I used here, you will not get success in this. Okay. And next I'll take some examples on 5 marks question, and then I'll go to 50 marks questions. Okay. And I would like to follow Baligar book. I'll solve the exercise from the Baligar book, and I'll give you all the questions to you people also. Okay. You do not go for purchasing the book now. In my class, I'll give the question and answer also. Okay. Then we see some examples. One more thing you have to remember, the factory overhead. The factory overhead is always based on labor cost, direct labor cost. So you have to calculate the factory overhead rate. The factory overhead rate means it is the relation between the factory overhead and direct labor. How much percentage you spend on factory depending on the labor cost. That is called as factory overhead percentage. So to ascertain the factory overhead percentage, factory overhead divided by direct labor into 100. This equation is important, and if in the question they ask to calculate, or if they ask to charge the direct factory overhead based on direct labor, you follow this equation. Okay. I think sir has already explained this one. And next is office and administration overhead. Office and administration overhead is always depending on the factory cost or work cost. So depending upon the factory cost, we charge the factory administration overhead. So administration overhead percentage is calculated on the basis of administration overhead and factory cost. Divide the administration overhead by factory cost and multiply by 100, you will get the factory administration overhead percentage. Okay. If they ask to follow this percentage, you follow the percentage while solving the problem. These are the two important equations. And sale profit is always based on sales. Okay. That I will explain with one example. Okay, this is the 5 marks question. You see the question. Is it visible to you people or not? From the following particulars of Udyog Limited, prepare cost sheet showing cost per unit. In this problem, direct material cost is 5 lakh, direct expenses 2 lakh, direct wages 3 lakh, then selling expenses or selling overhead rupees 5 per unit, factory overhead 50% of direct wages, administration overhead 10% of direct cost, unit produced 10,000, and selling price is 150 per unit. Okay, this is the problem. This is a 5 marks question. You have to solve this problem. You have to solve this problem with the help of given information. So, in the first stage, you take the direct material, direct labor, direct expense. The total of this is called as prime cost. To that prime cost, you add factory overhead. Factory overhead is, what is factory overhead? 50% of direct wage. Direct wage is 3 lakh. On the 3 lakh, you make 50%, that is 1,50,000. You add 1,50,000, you will get factory cost. Then add administration overhead. Administration overhead is 10% on factory cost. Whatever you calculated in your cost sheet, the factory cost, to that you add 10%. Okay, the 10% is called as administration overhead. Then you add selling and distribution overhead. Selling and distribution overhead, rupees 5 per unit. For 1 unit, 5 rupee, you produced and sold 10,000 units. You produced 10,000 units and sold 10,000 units, multiply by 5, you will get the total cost. And then you write the sales and ascertain the profit. Okay, you see here. I have not taken the date. First, direct material consumed, it is 3 lakh. Divided by 10,000, sorry, it is 10,000 per unit. Okay, little bit confusion is there. Direct material consumed is 5 lakh. Okay, this is, you divide this by 10,000, you will get 50 rupee per unit. Okay, then you write the direct labor. Direct labor is 3 lakh, divide by 10,000, you will get 30 rupee. Okay, then direct expense. Direct expense is 2 lakh. You write 2 lakh and divide by 10,000, you will get 20. Okay, the aggregate of these three is called prime cost. The aggregate of this is called as prime cost. Okay. Prime cost. This is prime cost. Total is, I think, 10 lakh. Cost per unit is 100. 100 is the per unit prime cost. 1 lakh is the 10 lakh is the total. Then you add the factory overhead. What is the factory overhead? Factory overhead is 50%. 50% of direct labor. Direct labor is 3 lakh. On this 50%, you calculate 50% of direct labor. 3 lakh into 50% is equal to 1,50,000. Okay, 1,50,000 divided by 10,000. That is 15. 15 is the per unit. Then take the total. 1,15,000 is the total, per unit is 115. Then this is called as factory cost. Okay, this is called as factory cost. The next, office and administration overhead. Office and administration overhead is how much? 10% of work cost. Work cost means factory cost. Factory cost is 11,50,000. On this 10%, you calculate 10% of factory cost. 10% on factory cost. This is 1,15,000 divided by 10,000. You will get 11.15. My dear friends, time is going out of order, and once again you join after 10 minutes. Okay, I'll give you 10-minute break. I will give you 10-minute break, and again you join after 10 minutes. That means 10:50. Okay, you again join at 10:50.
Okay, sir.
Uh, 1,50,000 is the factory cost. On that 10% you calculate, you will get this answer. And take the total. This total is called as cost of production. Okay, this is called as cost of production. Cost of production. Cost of production is 12,65,000 total, and per unit is 126.5. You can take the total, or you can ascertain by dividing. Okay. Then next is selling and distribution expense. Selling and distribution expense per unit is rupees 5. Selling and distribution expense is rupees 5. Then they have given the per unit expense. Then you multiply with the unit produced and sold. And 10,000 units sold, you multiply and you will get 10,000 into 5. You calculate 10%. This is 1,15,000 divided by number of units produced. Per unit cost is 11 rupees 50 paise. Okay, you take this total. This total is cost of production, and to that cost of production you add selling and distribution overhead. Selling and distribution overhead is rupees 5 per unit. So 1 unit 5 rupees the cost of selling the product. Then you sold 10,000 unit. To sell 10,000 unit, what is the cost? You ascertain by multiplication. You take the product. So 50,000 is the cost. Then per unit is 5 rupee. You take the total. This is the cost of sale. This amount is called as cost of sale. Okay. Then you leave one line here. You leave one line here and take the sales. Okay. Sales is 10,000 units at 150 per unit. You take the product of these, you will get the total sale. So, directly taken the answer. You see here, sale is 15 lakh. 15 lakh is the sale. And difference between these two is called as profit or loss. Profit or loss. Okay. If the sale is more than cost, then that is profit. If the sale is more than cost, profit. If the sale is less than cost, then difference is called loss. Okay. Selling price per unit is 150 and cost of sale per unit is 131.5. Difference is 18.5. This 18.5 represent profit per unit because selling price per unit is more than cost of sale per unit. Okay, like this you are certain. This is